Hello and welcome to the News9 Plus Show on the world's first news and current affairs OTT platform, News9 Plus. President Draupadi Murmu addressed the beginning of the budget session today with a joint address to both houses of the parliament ahead of the presentation of Budget 25-26 by reiterating the government's commitment to the middle class. Now, Chief Economic Advisor V. Anantha Nageswaran also gave a status report on the Indian economy in the economic review that he presented in the parliament, in fact, outside of the parliament today. As per the survey that was tabled in the parliament, India's economy grew at 6.4% for financial year 25. That's the number projected, driven by a rebound in rural demand, strong growth in construction and utilities, and a solid performance in the services sector. Retail headline inflation, meanwhile, softened from 5.4% in financial year 24 to 4.9% in April to December of 24 if you set aside the prices of tomatoes, onions and potatoes. So this was primarily driven by a reduction in core inflation. India's unemployment rate, meanwhile, has also declined from 6% in 2017-18 to 3.2% in 23-24, according to the document, adding that labour force participation and worker to population ratio have both indeed increased. These were the highlights to understand the economic survey, what it says about the macroeconomic picture. Joining me on the show is economist and journalist Shubhamoy Bhattacharjee. Also with me in the studio is my colleague Karthik Malhotra. Gentlemen, good afternoon. Karthik, coming to you first. Let's take our viewers through what the economic survey has to say. How has the economy done so far this year, and what's the projection for financial year 26?
You know, Shweta, I hate to sound like a naysayer, but I believe there is nothing new really that we have gotten to understand by way of the economic survey and the highlights of which that we've been able to read thus far. So, you know, whether you talk about India's growth projection, I think the economic survey is also pretty much saying what the National Statistics Office had said, that India is expected to grow at 6.4% this year. What is worrisome to me is that the projection for next year also doesn't look too good. So the projection for FY26, and there's a wide range which the economic survey gives, is likely to grow from 6.3% to 6.8%. So if you take the bottom part of that range, that next year the economy will grow at 6.3%, and assuming that this year we are able to grow at 6.4%, that means there's going to be a slowdown in growth next year. But even if you look at the higher end of that projection, which is 6.8%, then even 6.8% is much lower than the 8%, that 8.2% or so, and the long-term 8% average that we were hoping to grow at for the next few years for us to overtake, let's say, Germany and Japan as the immediate target, and towards Viksit Bharat 2047. So that is the sort of, you know, dampener in the economic survey to my mind, and you know, we'll have to figure out how budget could address some of these growth concerns, and not just this budget but successive budgets as well. On the other side, what I did appreciate about the economic survey was that, you know, the Chief Economic Advisor is sticking his neck out and saying that there is a real case for deregulation, and the government must get out of the way of business and let business function and operate, and not really become a spanner in the works of business growth. So I think at one level, batting for deregulation is one positive as far as the editorial take on the economic survey is concerned. But I think a pessimistic to realistic growth estimate for next year is worrisome.
Let's also quickly get to Shubhamoy.
Sure.
What are you making with what has come out regards to the macroeconomic numbers? Are you happy with the projections of $5 trillion economy by FY28, 6.8 by FY30? Are these numbers realistic to you, given that rupee has been depreciating at a very fast clip?
Yeah, the numbers look realistic. That's okay, because these numbers essentially are, you know, taking on a very conservative estimate. And most of the growth drivers in the economy are essentially coming from the agricultural sector. Now, if you're saying the agricultural sector, that is essentially a domestic sector that doesn't have too much connectivity with the rest of the world. The rest of it is the services sector, which has more or less been able to keep up its push. The big problem is about a manufacturing sector and what it does with respect to the export pessimism that's happening in the rest of the world. So all things taken together, 6.3 to 6.7, you know, that sort of a range is a fairly conservative estimate. What I would take on what Karthik was saying, and that's right, that the economic survey for instance, doesn't talk about some of the basic challenges that's coming up in the economy. And one of those is not only the issue of consumption, but also about the issue of freebies and the problems of finances, the state finances, and what it can do. We have just announced the pay commission. Now, that was not a surprise. I would have thought that some consideration of what is happening to the government's wage bill, the subsidy bill, the issues regarding the rising committedness of government expenditure, both at the central level and at the state level. And mind you, this is possible because the RBI analysis has already flagged these issues. So it would have been interesting to have seen how if the economic survey had looked at these issues, primarily because the survey I was listening with very lot of intent to what you're saying about the issues about deregulation and others. Now, those are practical things which the survey is not necessarily the place where those decisions will be made, or the central government will make the decisions. But on central state finances, an economic survey's comment on how the central finances will pan out, what are the risks, is it happening, would have been significant. I would have thought that given the fact that there's been so much of a discussion even from the Prime Minister about issues like freebies, impact on the state of the public finance, is something that is very, very significant, considering that it also does talk about the risks from AI and the labor market. So that was an opportunity which I thought it had missed. Yes.
Karthik, I think interesting point that I believe Shubhamoy was making, that this comes before DeepSeek, which was likely to change the fortunes of workforce, companies, how they function, how they attract more labor going forward, and perhaps revolutionize the way, labor workforce participates in economy.
You're right. Though I think, the job of the economic survey largely is to present a report card of the government and a report card of the country for the ongoing year, right? So how technology is likely to disrupt industries going forward, or work life going forward, or governments going forward, is something that yes, the economic survey does periodically touch upon, but I think DeepSeek is too recent an example for the economic survey to have objectively been able to include. But you're right. I think, what is also curious to my mind, and there's something that you mentioned as you opened this discussion, Shweta, is that even when you talk about inflation softening, right, I think the economic survey has been very selective in identifying periods and factors that go into the data that it projects. So, for example, if you look at the EPFO numbers, and I'm talking about formal employment here, when you talk about EPFO numbers, the economic survey says that in the April to December period, there have been as many as 95 lakh jobs that have been created. The comparison it makes is to the pre-COVID FY19, FY20 era, where a total of just about 65 odd lakhs of jobs were created in the formal sector. So, you're cherry picking on your comparison points, and that is something that often tends to confuse you on the real trajectory of growth that the country is taking. Now, if you look at FY20, for example, in FY24, which is the year that ended on 31st March 2024, last year, if you look at the jobs created as per the same EPFO data, that number was at about 1.3 crore people, right, above the age of 18 who got employed for the first time. So these were enrollments in EPFO. So if you were to extrapolate the data from April to November, and add another 50% to that for the balance December, Jan, Feb, March, you're looking at almost the same number. So on a year-to-year basis, has there been a growth in jobs? I think the economic survey next year will tell us perhaps not. But as of now, as things stand right now, it doesn't factor that in. The question you were asking, Shubhamoy, earlier about what Donald Trump could do, and how that is something which can impact not just India's growth, but overall global growth.
Right.
Yeah, so we really don't know right now, and it's hard to predict, will the tariffs come, will the tariffs not come? Will US begin drilling more and start exporting more oil? Will the pressure that Donald Trump is putting on oil-producing nations to cut down on prices, how much of that is actually going to fructify into real action is something that right now is difficult for anybody, including the chief economic advisor, to arrive at something concrete about. However, I think certain guardrails and certain red flags, could have been included in the economic survey.
Absolutely. But apart from the factors that you cannot really predict as to how the economy will perform, whether tariffs will come or not come, whether there is going to be more thrust on fossil fuel drilling, there are some tangible movements, and that is especially on currency front, where we have seen currency depreciating at a really fast clip, and that is what economic survey talks about. Going back to the data that has come in by the way of how much Indian currency has fallen vis-a-vis other nations, South Korea, there was an example of Brazil. The data was up until 6th of January, but the real action only happened around 20th of January. And that data again is not accounted for.
You're right. So I think, the economic survey also had to put a stop date to its own data collection and then putting all of that into perspective. So yeah, I mean, let's cut some slack to the chief economic advisor. I think he would have needed those 20-25 days to really crunch that data and prepare a fairly robust document. But you're right. I think the rupee has depreciated vis-a-vis the dollar, and that is something that again has to do with Donald Trump and the fact that that the greenback is being used as a hedge, because you don't know again which way the tariffs are going to go and how the global economy is going to pan out, with US pretty much being in the driver's seat of decision making that impacts global economies. So yeah, I think coming back to the point, yes, till 6th of January, the data that we had kept a rupee which was, about a rupee stronger against the dollar. Right now, as of this morning, the rupee was at about 86.65 to a dollar, and that is something that we have seen, a solid depreciation in the currency, which also tells us that in pure dollar-denominated GDP terms, India's target of 5 trillion by 2028, FY28, is something that may actually not come through, simply because if the rupee continues to depreciate the way it does, you might be growing in rupee terms, in absolute value of currency and the absolute value of production that is happening in the country. You may actually show growth as a rupee denominated growth. But when you convert that on the exchange rate against the dollar, and the rupee continues to depreciate, then perhaps that $5 trillion dream, which the economic survey does state as something that will happen by FY28 and a $6.3 trillion by FY30, is something that may find roadblocks in the depreciating currency.
I think both Karthik and I, while we were going through the economic survey, found that some of the data was cherry-picked perhaps to suit the government, which also includes data on EPFO numbers, prior COVID, post-COVID, then the data on inflation, which for some reason does not really include price-sensitive tomato, onion, potato. Is that something you also drew out of the economic survey?
That's something that's there, but then that almost every, to give credit, almost every economic survey takes on data till the end of November. It's the April to November period. In fact, some of the data that it stops at is October, and that's more or less true for every economic survey down the years. So it takes on down the year. What it doesn't do, and that's a very good thing it has not done, it has not compared apples with oranges. The actual estimates which comes out of the CGA data of government finances, and ignoring that to look at the budget estimate. That it has not done. In one of the years, that was something that was done, and that actually took made the economic surveys analysis really not on. And that was something that we have fortunately gone out of. So that way, I would say there is more data transparency now. On the employment data, I would give it the point that the employment data is still stabilizing. The PLFS data is sort of coming into a sort of a stability. So there is occasion, and obviously a government would try to say that, look, I am on a better footing as far as my set of numbers are concerned. So that, I suppose, would be would fair enough to say that that's something that is a judgment call, and the economic and the chief economic advisor is within his remit to take it on. The big thing that it talks about also is of the foreign direct investment. This is something that has really been talked about a lot. And while the chapter on foreign direct investment, the external sector, talks a lot about what are the constraints in FDI, but it goes on to a lot of this tariff issues. And the interesting thing that it talks about is that it says India faces a lot of non-tariff barriers. Tariff barriers may have come down in the corresponding countries, but non-tariff barriers like the CBAM, the Carbon Border Adjustment Mechanism, the deforestation regulations, those have actually risen, and it makes it a very strong point to say that given all those things, it is not a fair thing to say that India is high, Indian tariffs are high. Now, coming just a day before the budget, it's a very interesting read as to whether it's a direction finder for the finance minister in terms of her lookout for what she would be presenting in terms of her look on the customs regime,
right,
which we are talking about. And that comes down to directly to what Karthik was saying earlier about the impact of the Donald Trump regime, where tariffs will be a very major issue that will be discussed and flagged. So I think that's a very interesting conservative position that has been taken in the economic survey, and I would think it towards it. Yeah.
All right, and I think we'll have to wait and watch out for what Nirmala Sitharaman really comes around with when it comes to indirect taxes, customs duty, whether tariffs will go up or down, whether there will be a tit-for-tat attempt made by India. Remember, there's no tariff announcement on India just as yet, but all eyes will be on budget tomorrow. Shubhamoy, Karthik, thank you very much for taking time out. Thank you. Finance Minister Nirmala Sitharaman is all set to present Union Budget 25-26. Now, this budget comes after the COVID lockdown, Ukraine-Russia war, which led to a spike in inflation worldwide, and now with the US President threatening tariffs. The Indian economy is also facing several challenges. The two biggest engines of GDP growth seem to have run out of steam. Indians are not spending enough, and private firms have been sitting on sidelines instead of investing in creating new productive capacities. So, what's the solution? It all comes back to the Indian consumer. Unless people start spending more, it may not be possible to get out of the rut of sluggish growth. So, is it time to cut taxes? That's the big question. Then there is the threat of AI on job creation and job generation, as well as skilling, two of the biggest themes to address in a critical gap in the workforce and stimulate income growth. So, what India needs at this point to create jobs, and what will the new avenues be for government to be able to explore job creation for the future? We'll be talking about all of that. Joining me on the News9 Plus show are Subburatnam P, Chief Operating Officer, Team Lease Services. Also with us is Rajat Bose, is the partner at Shardul Amarchand Mangaldas and Company. Also joining us is Riaz, he's a tax partner, Grant Thornton Bharat LLP. Thank you very much, gentlemen, for taking time out. It's a very crucial time, just coming off economic survey and heading into budget, the big budget tomorrow. I want to first come to you, Subburatnam. What is your expectation as far as taxes is concerned? I think we all know what the problem is, and the problem continues to be the fact that consumption is not picking up. The government knows it, experts know it, but the question, of course, remains, will the government do anything about it?
Yeah, first of all, thank you so much for inviting me. Happy to be part of this show. So it's actually a kind of a vicious cycle. The consumption has a direct impact towards the job generation or the employment generation. See, today, for example, anything that you have let's say today, there are a lot of untapped markets. And the more the market actually opens for consumption, what happens is you indirectly get the organizations to get in over there, and the consumption increases, and you start investing more. That actually leads to more employment growth. So to get the consumption part, I think it is time for us to actually get into the untapped markets, and that's something, a key expectation that we have. Okay, what are the kind of strategies that are likely to be expected from this budget?
All right, Rajat, coming to you. Of course, the government needs to get into untapped markets, and consumption is one way to fuel growth. And the only way you can do it is either by giving more money in the hands of people or generating more jobs. I think both of which are extremely important right now. So would it be therefore right to say the government may just cut income tax rates, maybe introduce a new tax slab? There is a whole host of expectations out there. What are you hoping the budget will do to spur growth, demand, as well as more job creation?
Yeah, I feel it's going to be a combination or a mix of both, or ideally it should be. One is we'll have to look at certain rate cuts in income tax as well as in indirect tax. I feel personally that the taxation rates, both direct and indirect, as of now, are slightly on a higher side. So that is, of course, on the agenda. I feel we can expect at least, if not a big cut, but at least something to sort of cheer about. That is one. And secondly, I think on the jobs front, the focus of the government will be to give some impetus to the manufacturing sector, because what we've seen is of late the manufacturing sector is slowing down. And in fact, if you would have seen the economic survey as well, uh, there was a clear sort of impetus. There was a clear focus on increasing the uh, manufacturing activities in India, as you know, the chief economic advisor had also suggested that we are losing out on the manufacturing front to China. While services is booming, but manufacturing definitely needs some kind of a dose, if I can use that word,
Right.
to bring it up on the right path.
All right, Riaz, I think there is enough and more room at this point to cut taxes, to perhaps give more money in the hands of people. Do you think the government will go on that path or continue to maintain its fiscal discipline and perhaps also continue to cut down on subsidies being offered? Because these are hard times. Let's accept it. The global economic scenario, the environment is not looking great. Some of the jitters are now being felt in India as well. In your assessment, is there room to cut taxes?
Well, I think we can see it in two parts. On one hand, as you rightly pointed out, we need to have more money in the hands of people, especially the middle class. And I think there is some scope for improvement. Some cut in slab rates. Let's face it, that 30% at a 15 lakh rupee income, assuming even four people in a family, it's really harsh. So that's where we can expect some sort of relief. And on the positive side, the rate of tax collection has been pretty robust. It has been growing. Today, around 11.8% of GDP is collected by taxes. So it's pretty robust. It would give some elbow room to the finance minister to provide some relief at that level. But, major tax changes maybe not expected in this budget, especially with the comprehensive tax review around the corner. So yes, some rate cuts could be hoped for.
All right. You talked about taxes, and I think that's the favorite subject of every person out there. I think the only thing they expect from the budget is what's more cheaper, what's more expensive, and how much are we going to save by the way of taxes. Let's talk about taxes. When the numbers come in, the total taxpayer base has obviously increased to about 7.5 crore rupees as of this year. However, the people who are effectively paying some tax, those who are not filing nil income tax, is a very limited small base to about 3 crore rupees. And that 3 crore rupees base continues to pay higher taxes and more taxes. And this is essentially the middle class that earns about 6 to 36 lakh rupees. So I have to ask you right now, pangs are being felt, Riaz, by the middle class. So therefore, I think, the government that keeps talking about doing right by the middle class must do something about, this section of people earning between 6 to 36 lakh rupees and give them some relief.
No, absolutely. That's the point I was making a little earlier, that we need to provide relief to the lower income, not lower income, but income of 15 lakhs at 30% is just not justified, and maybe rate cuts there are important. There's another point there that we need to focus upon, that while we are talking about job creation and all that, there will be all these jobs. What happens thereafter when you finished your working life? What really is in store for us? And, what we really need to do is even focus on pension schemes. Today, to encourage something on the pension scheme front is so important, because we do not have a social security system like some of the developed countries. We cannot have it in the short run, especially with the kind of the size of the population that we have. So at least some incentive on pension funds by way of tax adjustments would definitely go a long way. So providing some relief at the lower end of the lower end of the tax brackets, that is 15 lakhs around there, and some incentives even towards pension will go a long way in helping the middle class get some more money in their hands.
All right. Subbarathnam, I think job creation continues to be a key focus area for the government. It launched about 3 schemes last year in the budget in July of 2024 to address the problem of jobs. However, if you look at EPFO data, which is now coming out by the way of that economic survey, it goes on to suggest that job creation, at least the formal job creation, remains steady at about 1.3 crore people who are being enrolled into EPFO. We don't know the number of people who've been taken out because data is not shared to that regard. Are you happy with the pace of job creation? And if not, what are you hoping from the government?
I think you touched upon a very critical point, Priti. So what actually happens is, just for a moment, actually let's zoom out and look at from the holistic perspective. So today we are a population of 145 crore, and we have more than 40% of our population as a working population, which is almost about 60 crore. Now the EPFO data says 7.5 crore to 8 crore is the UAN registered users in India. Now, then when we say that, okay, we have 40% of the population, which is almost 60 crore, and it is only 8 crore reported, then where is the balance? So the balance is actually in the informal sector. And predominantly, even if you subtract 50%, this is actually in the agriculture sector, the balance almost about 20 plus crore has to get actually formalized. Now, that is one area which government has to actively work to get the actual into the employment mode. Now, within this 8 crore statistics, if you actually deep dive into it, what you said is right. It's hardly the 2 crore people who actually get into the taxation part. And that's not the revenue generation stream for government. That's not sufficient. Now, how do we cover that? So specifically, the formalization is the key factor. And once we have the formalization coming in, you will actually find the social security component that is getting covered for all of them as well. See, what's the difference between a formalization and a non-formalization? The formalization crowd actually has complete the PF, the social security, the long run benefits, everything you are covered under the social security radar. Whereas the informalization, today you actually pay to your maid or your servant or somebody who works as a subcontractor level.
Right.
Any such benefits, and they don't come under the purview of employment under the category of government. So that's the prime. In fact, that's the most expected outcome that what we see. Last year, government attempted through ELI schemes, the employment linked incentive schemes. There were 3 schemes that were launched, scheme A, B, and C, something specific for manufacturing companies, something specific for the employer, something specific for the employee as well as a first time UN generation. But however, the execution part of it is still not seen the ray of light. So most probably what we also expect is maybe some kind of additional boost or incentivization to actually make it happen. That will actually fast track more employment, or maybe in terms of PF registrations, that will actually come in.
No, Subbarathnam, I am a little dejected right now. I don't know if you are. Since July, we are sitting in at the end of January. Absolutely no guideline on any of these 3 schemes. Just this morning, President of India talked about how there is a growing thrust and impetus on job creation and internship scheme. She spoke very affectionately of the internship scheme that is likely to employ more freshers and give people some work experience. Where is the formalization of these schemes? Have these schemes been implemented? Is there a rollout? If yes, what's the status like? We know nothing of these schemes.
No, true. That's actually a concerning point for all of us. But somehow I can actually say that the PM internship scheme actually has gone live towards end of October, thanks to all the framework and the guidelines that have been rolled out. However, on ELI, I think there were a lot of multiple discussions around the framework and then how to get it done. There were a lot of guidelines that was given, and then from the industry, there were a lot of inputs being actually given back. Maybe that's one of the reasons. Maybe we'll have to wait for it. What we've been told is that maybe in the next 2 to 3 months, but as of now, the time frame has actually not been declared. That's an important area of focus for government to actually make it live. That should help most of the things into a positive side.
All right. I like the fact that you're very optimistic about it, and I hope the youth of our country are as well. I want to come to you, Rajat. As far as taxes is concerned, one way people pay taxes and perhaps don't really realize is by the way of indirect taxes. Now, while the government cannot really do much in the budget on GST, it can do a lot on customs duty. And there was some sort of relief as far as gold customs duty is concerned last year. Are you looking at relief on indirect taxes as well in this budget?
Surely, there should be, primarily because I think if you're looking at the objective of the government to increase manufacturing, so in line with that objective, what I expect is that there would be some reduction in customs duties for inputs, components, raw material, so on and so forth. And there would be increase of customs duty on finished products. This is basically to encourage companies set up manufacturing shops in India and manufacture. So that is something which is definitely on the anvil. And
any key items that you see getting more expensive? Any key items that you see getting cheaper or expensive?
Well, as far as cheaper, I think the thrust sectors right now mostly are, the sectors in sustainable space, the renewable energy sectors, EV, lithium-ion batteries, semiconductors. These are the sectors where most of the tweaking is likely to happen. And I am expecting the government to reduce certain customs duty on input components required for manufacturing, at least some of these semiconductors and PCBs and all these things, which are not getting manufactured in India as of now because of the high capital cost for setting up the plants here. So there, of course, the government can do something. Apart from this, on the GST standpoint, I think while you're right, most of the decisions are taken by GST Council, but you would have seen off late in the last couple of GST Council, not much has happened. In fact, one of the key areas which the government was trying to reduce the GST was on the insurance sector. And that again is something which directly impacts the middle class. When you
so
talk
I
about
have to
life
ask you,
insurance,
this is a conversation we've all been having for a while. GST on health insurance. Do you believe budget will do something about it? Do you think the government, as far as health insurance is concerned, is likely to make an announcement in the budget?
I don't think that they are still, finished their homework because last time what we were told during the GST Council, after the GST Council meeting, was that there is some homework which still needs to be done to see what exactly is the impact. I doubt that they have finished that exercise, but definitely, we can have some kind of changes in the legislation of GST in order to sort of free up some of the input taxes which become a cost for a lot of these sectors, so that the cost of the base on which the GST is calculated comes down, and eventually the prices come down. So something on those lines is definitely there in the agenda.
All right. And, before I move on from indirect taxes, we also have, this is the first budget since Donald Trump came to power. And so one has to also account for what could come by the way of tit-for-tat tariffs. If at all Donald Trump decides to pose tariffs on India-made goods, India could retaliate. And if that happens and if government is trying to prepare for it, what according to you would be the items that we essentially import from the US that could get more expensive?
As of now, tomorrow, I don't see any of that happening. I think it's too early. But yes, going forward, who knows? There are certain things, especially, again, it's sort of a catch-22 situation because we have a lot of defense deals with the US government. And pursuant to those deals, there's a lot of import of defense equipment as well. Now, I don't see the government imposing any kind of taxes or duties on defense items, so to speak, because
Absolutely.
that is concerning national security.
And it doesn't do very good for us.
It doesn't do very good for us. Apart from that, I think there are a lot of other products which, again, directly impact the middle class and the lower income group people, which are used in daily routine. So on those, again, it's going to be very difficult for the government to increase tariffs because that impacts the middle income group population of the country. So we'll have to see how it pans out, and I think that right now it's too early for the government to also sort of take any of these kind of statements so seriously.
All right. Riaz, coming to you, I think taxes is going to be a big whammy for, a lot of middle class people. And as data actually goes on to suggest that of the 3 crore people who are not paying nil tax returns, they have increased the tax kitty. So tax collection has gone up 144% year on year, which means that people who are paying taxes are paying a lot more tax today than they were paying a couple of days ago. And a conversation in all our drawing rooms is that, goods have become expensive, services have become expensive. In your assessment, what can the government do really, apart from cutting taxes immediately, to give some relief to the middle class?
I think there is really very little scope to on the tax front for the government, except for cutting some rates. On one hand, the government has made it clear that we are moving away from the deductions, exemptions, and that regime. So there's not much scope there for the government to actually come up with any suggestions or further reliefs there. Secondly, as I was just speaking a little while ago, the comprehensive review of the Income Tax Act is on the anvil, and why most of it will be towards rationalization, simplification, and it's going to take some time because there are 22 subcommittees set up. Or I think more than 6,500 inputs have come in from stakeholders. So all that is going to take a year. So during this particular budget, we expect very small immediate requirement kind of changes that could come in. That would be.
So in which case, because I've run out of time, I have to ask a more pointed question. Are we looking at old tax regime going? The entire idea of bringing about a new tax regime was to bring uniformity in taxation. Now, a lot of conversation and chatter that perhaps the deductions, the limits will be increased, but it makes no sense at this point. If you are to have a unified tax regime, then perhaps the old tax regime has to go, if not this year, next year. Are you hoping that perhaps this is the year where old tax regime will go for good?
Unlikely. At present, almost 72% of the people have already opted for the new scheme. So it has become the default scheme, so to say. I don't expect the two schemes to be merged right away. I think it'll be done over a passage of time. So I don't anticipate that coming in this year.
All right, not likely to happen this year, but those are the takeaways as far as taxes is concerned. What you pay out of your pocket to buy goods, services and pay to the government directly by the way of income tax. The expectations from the government is that there will be job creation, there will be more money in the hands of people. How government will do it, we'll have to wait till tomorrow. But Subburathnam, Rajat Bose and Riaz, thank you very much, gentlemen, for taking time out for joining us here on News9 Plus Show. US President Donald Trump has repeated his threat of imposing a 100% tariff on BRICS nation if they try to replace the US dollar with any other currency. Now, on his social media post, Trump said, and I quote, "The idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over, and that any nation which creates a new BRICS currency will face 100% tariffs. They can go on finding another sucker nation. There is no chance that BRICS will replace the US dollar in international trade." He reiterated his commitment for a 100% tariff on BRICS. Now, Brazil has proposed that BRICS member states create a common currency for both trade and investment amongst each other. India has, however, maintained that it does not want to do away with dollar just as yet. In fact, in 2024, former RBI Governor Shaktikanta Das said that the government was not thinking of moving towards de-dollarization just as yet. Now, Friday's warning is a repeat of one that Donald Trump made on 30th of November, weeks after winning elections in the US. So why has Trump threatened the BRICS nation and what does it really mean for them? Let's talk about that. Joining us on the show is Dr. Ankit Shah from GNLU Legal Incubation Council. My colleague Kartik Malhotra continues to be with me. Kartik, a repeat of a threat that he made earlier, immediately on the day he was sworn in as the 47th US president, that there is going to be a 100% tariff if you move away from dollar. BRICS nation have been trying to do it. In fact, India has been a part of those countries which have been trying to replace the dollar, or at least not give it the kind of prominence it continues to have or enjoy.
Right. So, I believe that this threat particularly happens to be an empty threat, because I believe that a BRICS currency in itself is an empty idea at this stage. So, you've got to look at de-dollarization from two perspectives. One perspective is that you want to reduce trading with any other nation using an external currency, which the most popular one happens to be the US dollar. And you want another country to accept your currency when you're trading with them. Right. So this is one part of the argument. How that helps any country is that if you were to trade in US dollars, that means from the open market you're buying US dollars. How are you buying US dollars? By selling your own currency. So I sell 86.6 rupees today to buy $1, and I use that $1 to buy goods worth $1 from China, for example. Right. What this does is it weakens my currency because I'm selling my currency, and it strengthens the US dollar because I'm buying the US dollar from the open market. Now, unlike the European Union, which has one currency called the euro, there is no conflict within the European Union. There are no real tariff barriers between the European Union, and the European Union operates as one geographic bloc of nations. It is easy for them to have a central bank called the European Central Bank to manage and regulate that currency between all member nations. Now, in the case of Russia, China, and India, and leave alone Brazil for now, or leave alone South Africa and the rest of the African bloc. But if you were to, and Indonesia, which has just recently been added. Now, if you want to keep a central currency for the BRICS nations, question number one is that where is the central bank going to reside?
Absolutely.
And what is going to denominate that currency? And I doubt that in the foreseeable future, at least, India and China, at least, even if you keep Russia aside, and having a common currency with Russia right now, in any case, is going to be frowned upon from the rest of the world. So India and China agreeing on which of the two countries will house a central bank in itself is a non-starter for me.
Absolutely. Let me quickly get in Dr. Ankit into this conversation. You've been talking a lot about de-dollarization. Whether Donald Trump will make good on his promise, I think, is a secondary question. Is there room for de-dollarization?
We got to understand that this entire concept of de-dollarization is about replacing your international trade with national currencies. So this very idea that there has to be some BRICS common currency to come up was an idea which was during 2022, when there were only 5 core members in the BRICS group. Now you have more than 10 additional members which are added to the larger BRICS plus, and the next BRICS summit will see more additions. So there is no scope for a common BRICS currency into an entity which is in an ever expanding mode. So I do not see a common BRICS currency coming up anytime soon.
Okay.
Second thing, this entire idea of tariff business, which President Donald Trump has been talking about, he is envisaging an America where prior to the establishment of the Federal Reserve, central banking, and prior to income tax, the major revenue for the US economy used to be tariffs on foreign goods. So there was no income tax in the US economy, and there was no reserve currency status for the dollar. So he's trying to go back to those times. So as I've been talking, he's looking at removal of income tax, or a significant reduction of income tax, and impose heavy tariffs on all the goods that enter the United States.
I mean, he's set up a commission. He's only set up a commission. He's not moving towards it just as yet. I think he'll wait for the commission's recommendations. But let me go back to de-dollarization. I think because that continues to be something he's saying again and again. I believe there is some real threat that the US is seeing or feeling right now to be talking about de-dollarization again and again. Are you saying there is no merit to the complexities and conversations around de-dollarization? It may never really happen, may never see the light of the day.
No, so it is actually happening. So the BRICS plus nations are de-dollarizing by replacing the US Treasury and US dollar with accumulating gold. And the Western nations are de-dollarizing by replacing the US Treasury with cryptocurrencies. So East and the West both are de-dollarizing. That's a fact. Okay. Now, what implications does it have for the US dollar and the Western citizens? to my understanding, if they are to begin any kind of manufacturing, which President Trump promises to bring
Right.
back jobs, homes, I believe a significant cut to Western salaries and Western assets. Because without that, you cannot begin manufacturing in the United States. Because they've been enjoying this reserve currency status for quite a long time, and which has bubbled up their asset values and the salaries which they take.
Right.
So if today, if they are to produce a $10 Chinese product, even at $20, I mean, President Trump is saying 100% tariff, right? So a $10 Chinese product becomes $20 for American citizens. It certainly doesn't solve inflation, but for America to even produce that product at $20 price point, they will have to significantly reduce the salaries of
All right.
the Western citizens on an average.
All right, Dr. Ankit Shah, Kartik Malhotra, thank you very much for your thoughts on that. Donald Trump there reiterating his threat of 100% tariffs on BRIC nations if they continue on the path of de-dollarization. And thanks for watching the News9 Plus show.